Hello all, this is CA Balram Muchadi. Welcome to our series on corporate tax return filing. So in this episode we are going to talk more about the free zone businesses and the corporate tax applicability to those businesses. This is one of the important area where a lot of confusions and less clarity is there. So that is the reason why we wanted to focus more on this free zone related corporate tax laws, and then what are the conditions that you have to meet to get the 0% tax benefit, and what are the books of account that you have to maintain, what are the other steps or important aspects that you need to look at to continue to get that 0% tax benefit. So we are going to discuss all those aspects. So to discuss more on this, I have my partner, CA Naveen Kabra. So we're going to talk more about those provisions. Welcome, Naveen.
Hi. Thank you, Balram.
Yeah.
Thank you.
So Naveen, just to start with, as you know, the free zones, businesses in free zones can get a benefit of 0% tax.
Yeah.
Meeting certain conditions. So what are the conditions that we have? What kind of tax rates that we have for free zone entities?
Right.
As per UAE Corporate Tax law.
So generally, as we have been discussing, there are two rates which have been prescribed under the UAE Corporate Tax law. One is 0%, which is mainly applicable to qualifying free zone persons. We will discuss now. And there is another rate which is 9%, which is even applicable to qualifying free zone person for their non-qualifying income and generally to other businesses. So essentially there are two rates, 0%, 9%. Now the conditions which you asked, there are 6 conditions broadly, which has been already explained in the regulations also, and also in the free zone guide. It has been detailed, in a detailed manner it has been explained by FTA. What are those conditions? First and foremost condition for any qualifying free zone person or any businesses in the free zone who wants to qualify for qualifying free zone person benefits, the first and foremost condition is to have adequate substance. Now what do we mean by substance? Substance generally has not been defined in the regulations. However, the guides and the free zone guide especially has given a lot of elaboration on the substance.
Yeah.
Typically, if I want to summarize, I would say substance is something which has to be qualified in 3 areas. One is sufficient amount of expenditure, sufficient amount of employees, and sufficient amount of assets. Now, the government or the regulations or the even by the way, these principles are exactly as what has been prescribed in the OECD guidelines also for a substance. Now bear in mind that the word which has been used is sufficient. It doesn't give a specific number or a specific value to the either employees or to the value of the assets or to the expenditure. It says sufficient. Sufficient basically the onus is on the businesses to explain to the FTA tomorrow if they come for an inspection that whether the substance what they have is adequate. So what does it mean? Let's say if there is a huge business of turnover of around $2 billion, for example,
Yeah.
and that business has only 2 employees. Now whether that is a justified number or not is something which the onus is kept on the businesses, but they have to determine whether that is a sufficient amount of employees or not. So this is what is the first and foremost condition of substance, which all businesses will have to be looking into, and they have to ensure that they have adequate substance all through the year. It's not only for a month or a 2 month or 3 months, but all through the accounting year, which is 12 months period.
Correct.
Second condition is they should have qualifying income. Now in the free zone guide there are specific items which are prescribed and which are only as qualifying income.
Yeah.
So that has to be looked at. Then third thing is the businesses should not have elected themselves to be taxed at a regular rate of 9%.
Correct.
So just to give you an example why this condition has been brought in. Now there are many scenarios where a business would want not to claim the benefit of 0%. However, they would want to be clubbed with their group companies, as we have a tax group concept also within the UAE Corporate Tax. They would want to be clubbed within their tax group, which could be an entity which is outside the free zone, and thereby they have the liberty either to choose to go for opt for 0% and meet these conditions and criterion, or they club with their business, let's say outside, and pay 9%. Or generally also, if they feel that some of the conditions would not be met and they are okay to pay 9%, they can easily choose to pay 9% and avoid the 0% criterion and to meet those conditions. So this is one of the conditions. The fourth and most one of the important aspect is arm's length principle and transfer pricing disclosure requirements. So we have a couple of articles, Article 34, 35 and 36 of the regulations, and Article 55, which talks about transfer pricing specially. So the QFZP, or the qualifying free zone person, needs to ensure that they are meeting the arm's length principle, they are paying their related parties and connected person as per the benchmarking requirements and as per the arm's length test, and also all the documentation around the transfer pricing disclosure forms, transfer pricing policies, local file or master file as
all
applicable. All the compliances will have to be ensured that they are adhered to and they are enough and very well documented.
Right.
And the audit is the fifth criterion, which basically talks that any QFZP or any taxpayer or any businesses who wants to seek the benefit of QFZP, their books have to be mandatorily audited. Bear in mind, the threshold of general AED 50 million is not there for the QFZP. Even if their revenue is AED 1000, irrespective of the revenue, they will have to mandatorily undergo an audit.
Correct.
And the the last criterion is the non-qualifying revenue, which is which is other than the qualifying revenue, non-qualifying revenue, and all other classes of income that should not be breaching the de minimis requirements, which is either 5% of their turnover or 85 million as an absolute number. So if that breaches, then the taxpayer loses the benefit of QFZP or loses the status of QFZP.
Yeah.
So this is one of the important. So these are the 6 conditions which needs to be adhered to and maintained.
Yeah. So one of the conditions that you mentioned is that the businesses should not elect not to be subject to tax at 0%, or they should not go for standard corporate taxes to be applicable, tax rates to be applicable.
Correct.
So generally, why do you think, in what kind of scenarios businesses would choose to go for that, when they know that if they don't choose that, they will get a benefit of 0% tax on their entire profit?
Right. There could be 2 or 3 scenarios. As I mentioned, one could be less compliance. Let's say if they do not have that kind of compliance, or they do not have that kind of governance structure, then they would opt for not for the QFZP status, and they would want to pay 9% tax. Bear in mind, why I'm saying that is not because if you lose your QFZP status, you do not lose for 1 year, you lose actually for 5 years.
Correct.
That the first year where you are paying the taxes, and the coming 4 years. So it's actually a penal provision in a way. So on the contrary, it sometimes can act as a deterrent, or I would say the provision has been made only to be put as a deterrent, so that this condition of the 5 years of losing the status is as a deterrent, so that the genuine taxpayer who is genuinely a qualifying free zone person should claim the benefit and not otherwise. One situation is that. Second situation, as I mentioned, if there is a let's say a group company which is outside the free zone, or maybe within the free zone, doesn't matter, and if let's say that company has losses, okay, and this company which is not opting for a QFZP has profits, so those can be set off against each other. So perhaps on an overall basis they may still pay less taxes.
Yeah.
So I guess that also could be one of the area where a little bit of tax planning can be done.
Yeah.
Yeah. So these are the broadly two areas which I think could
Business
be that
restructuring relief.
business. Of course, there are business restructuring reliefs given, so that you do not. Again, that is also part of the tax group concept only.
Yeah, correct. Yeah.
That is where I guess the taxpayer would think twice, or would think or before opting for a QFZP.
Correct. Yeah. One more thing is that there are businesses, if it is a startup company, or depending upon the nature of the company, initially you may or may not have the revenue.
Yeah.
As you mentioned that one of the main condition to get this qualifying prison person status is to have qualifying income.
Correct.
Correct. But what if in these scenarios of startup or companies which require long period to generate income,
Yeah.
in this initial period, they may not have income,
Correct.
right? They may not have any sales, may not have any revenue and income. So in this case, so do they get eligibility to become a qualifying prison person, or they will not be able to get that status? What is the consequence going to be?
You're right. It's a good question, Balram. I think the government has been, intelligent enough, I would say, to understand this. And since they are trying to foster a lot of startups, a lot of new businesses which are coming into the country, and especially in the free zones as well. So that is why the government, the Ministry of Finance, has brought in this particular provision in the free zone guide, and it has been clearly spelled out that if you are a startup or if you are a new company, the first year in which, let's say, if from the time corporate tax has kicked in, the first year, if let's say you did not have any revenue, and you only had expenditure. Now, by virtue of that, you do not lose your criterion, or you do not lose your QFZP benefit. If for the next 4 years, let's say, if you can make revenues and if you can earn revenues, and if those fall within the qualifying income, then the profits will not be taxed, and profits would be taxed at 0%. So that benefit has been already given. There is one important point which a taxpayer should understand, that at the same time, when you do not have a qualifying income, you should not have other income. If you have other income, then perhaps yes, you may end up losing your QFZP benefit. However, if you are genuinely a startup which is falling within the qualifying income criterion or qualifying income classification, and for the first year, let's say if you do not have any such revenue and you just have only expenses, I'm just giving you an example. So no need to worry, you will certainly get your QFZP benefits for the year when you will start deriving revenues.
This year as well as the future years.
Yes, of
right,
course.
yeah.
Of course,
so that's what is important.
Yeah.
So whatever points we discuss here, so they all boil down to your reporting or compliance.
Right.
Correct. Unless you do the right compliance or do it in a proper way, whatever benefit we have been talking about so far, you will not be able to get.
True.
So what are the specific things that we need to look at? What are the specific aspects that we need to look at as a qualifying prison person to get the status while filing the return? What are the important element or items that one needs to look at so that they do not get any impact on their qualifying prison person status while filing the return?
So, of course, it boils down, as you rightly mentioned, it boils down to the way the books are prepared, the way the books are kept, and the way the numbers are produced in the corporate tax return. That is the most important thing, provided that you are meeting those 6 conditions which we just discussed. So once this all is done, and then if you meet all those criterion, then you are a QFZP company and you can easily claim your 0%. Now, what does it mean? It means you need to first segregate. Okay, before that, of course, it is already understood that IFRS is the standard to be applied, whether IFRS for SME or IFRS for full IFRS. That has to be applied. Secondly, audit is already mandatory. So those 2 aspects are already covered. However, now the point is that you have to segregate your books within the qualifying income and the non-qualifying income, because the non-qualifying income, if it is breaching the de minimis, it will be taxed at 9%. And other than the de minimis, there are certain income which will be straight taxed at 9%.
9%, yeah.
Like for example, the profits from
which are
domestic
not considered for your de minimis calculation.
Correct.
Even if you have that income more than your de minimis threshold,
Correct.
you will still continue to have the status of qualifying prison person. But
Absolutely.
only difference is that income state will be subject to tax with 9%.
Exactly. So now what does it mean? It means your revenue streams has to be clearly differentiated, demarcated, and segregated in these three boxes, I would say, or in these three columns. One is the 0%, one is the de minimis calculations requirement, another one is the direct income, which is directly exposed to 9%. So having said that, the demarcation or the separation or segregation of these revenues, now the relevant cost also has to be looked at.
Yes.
If you do not do that, then again you will have a challenge in order to identify exact profits which is to be taxed or which is not to be taxed.
Yes.
So that is why the revenue and the cost it's very important that it is clearly identified, demarcated, and accordingly allocated to these respective boxes, I would say. Now there could be a scenario where there are certain expenditures which are purely common in nature, and you do not have any of the way to allocate them. So obviously, our accounting professionals, they understand that there are certain cost drivers and certain revenue drivers, and based on that you allocate on the best possible manner. This is what has been mentioned in the guides also, that what you do is you allocate those costs in the right manner, and then accordingly you account them in the relevant fields or relevant box, I would say the sections, and then you file your return.
Correct.
So just to on a very high level, just to explain that, when you are filing your return, you can have so let's say if your total profit is $1 million or 1 million dirham, let's say you may have 800,000 as qualifying income profit, and the 200,000 could be exposed to 9% tax. So this calculation or this derivation can only come when you have this segregation done clearly for the revenue and for the relevant cost.
Yes, correct. So, so one needs to maintain their books of accounts properly.
Absolutely.
From the beginning, they should have a clarity as to which income falls where. Accordingly, which cost element to be allocated to the respective category of incomes or business streams.
Yeah.
Correct. So one more important thing to look at is that most of the businesses here, they have offices or businesses in the free zones.
Yeah.
And they also have offices or businesses in mainland.
Correct.
Or they may have offices in free zones and offices outside of UAE.
Right.
Right. So for corporate tax purpose, they have clearly mentioned there's a concept called permanent establishment.
Yes.
So which is called as PE, permanent establishment. So in this process, you may have a permanent establishment which is in UAE, which is called as domestic permanent establishment, or you may have it outside of UAE, which is called as foreign permanent establishment.
Right.
So that we know. So now, how do we identify that you have a permanent establishment? Primarily, you have a domestic primary establishment, because businesses may or may not realize that they actually have a domestic permanent establishment, which requires separate treatment, and then filing should be done in a different way and all those things.
Right.
What are the scenarios you see, and where you may have domestic PE or foreign PE?
Yeah.
And what are the precautions that one should take care of?
Right. So yeah, I mean, this is an important point about the domestic PE and the foreign PE. Now, how do we identify? Most important or most easier way would be, let's say if there is a qualifying free zone person or a free zone person, I would not use the word qualifying free zone, but let's put it a free zone person. If a free zone person is a legal entity and they have got a branch which is outside the free zone within the UAE, so that branch automatically becomes a domestic permanent establishment. Similarly, if they have a branch which is outside, which is registered outside, will become a foreign permanent establishment. So this is called a fixed place permanent establishment, because this branch is essentially having a fixed place of business.
Correct.
Now, there is also a concept of the dependent agent concept. Now, what does it mean? It means that, let's say if I have a business in the UAE, I have an agent, dedicated agent for me, let's say in the US, and he conducts all the businesses for me in the US. He manages, he signs the contracts, he does everything. So that, by virtue of that, I create a dependent agent PE in the US. So in a nutshell, what I would want to say is the identification of a permanent establishment for any businesses could be these two ways. One is either they have a legal entity, which could be a branch, or if they don't have a legal entity, if there is a virtual entity, they need to understand this concept very clearly, that how the business is being run. If the business is continuously being run in this particular manner, where let's say there is an agent who is working for you in that place, then automatically you will create a PE. Sometimes even employees can create a PE. If you have permanently employee established in a particular place, it could be within the UAE for a free zone person, outside the free zone, or outside the geography of UAE. If you have a bunch of employees who are continuously working for you, so by virtue of that you create a PE. And this is a very international concept. It is not specific only for the UAE regulation or tax regulations. Permanent establishment concepts are used in most of the geography everywhere. So these are the way to derive the PE.
Yeah. So and then once you identify domestic PE or foreign PE,
Yes.
mainly domestic PE, then you have business or income coming from your free zone entity,
Correct.
and you also have income coming from your domestic PE.
Correct.
In this case, the rules that you mentioned earlier
9%.
about demarking separately your free zone entity related income and then domestic PE related income,
Yes.
allocating expenses accordingly, all those things to be followed even in this case also.
Absolutely. And one important point which I want to highlight here, Balram, is that when you have a domestic PE or when you have a non-qualifying revenue, so the cost which is getting allocated has to be done at arm's length principle.
Right.
This is something which perhaps a lot of taxpayers, a lot of businesses are not looking at. They are not even thinking about it, but it is very, very clearly spelled out that any transaction which is done between the free zone person, again, qualifying free zone person, and the domestic PE has to be at arm's length.
Yes.
So whether it is selling of goods or purchasing of services, purchasing of goods or selling of services, whatever it is, it has to be at arm's length. So this is something very important. And when we say arm's length, again, you go back to the article 34, 35, 36, that has to be applied equally.
Yeah, not just that, even you may have your corporate office in mainland,
Correct.
but providing services to your free zone entity, or you may have staff sitting in the mainland but providing services to your free zone entity.
Yeah.
So in this case, you definitely need to allocate your cost with or without markup according to your classification of your service or kind of service that you're providing to,
Correct.
and then comply with your transfer pricing rules.
Yes.
And we see a lot of businesses actually when we meet, even the medium size to large size organizations also, they do not get this concept or understand this concept whereby they do not follow this.
Yeah.
So then at the end of the year, you may get into some trouble. See, it's not just adjusting your books of accounts at the end of the year.
Yeah.
You also have other compliances like value-added tax returns filing.
Absolutely.
You also have custom duty, and you have other filings that you're doing on regular basis for hotels, restaurants, and other things. You have municipal taxes, municipal report that you're submitting. So all these compliances are there where your records or numbers are already submitted to various authorities, and your numbers are recorded there.
Correct.
So now if you have not done these adjustments or not charged allocated right
Absolutely.
values during the year, but you realized after the year or end of the year, then you cannot go back and make the adjustments. Or if you make the adjustment, then you have to you'll end up in paying certain penalties, or you may be subjected to non-compliance.
Correct.
So that is the reason why having an understanding of all these rules, following them from the beginning is all the most important, instead of realizing them late and then adjust them.
Absolutely. And as you highlighted an important point, this kind of scenario could be less vulnerable, let's say, when on the both sides you have 9% entities.
Tax
When I say 9%,
transactions.
yes, taxable, paying entities are both sides 9%. Now here we're talking about a qualifying free zone person.
Right.
So it becomes all the more important for the qualifying free zone person to make sure that the adherence to the compliance or the requirement is done from day one, not at the fag end of the year. Why? Because at one side you are paying 0% and on the other side you're paying 9%. So,
Yes.
obviously the authorities will be more interested and you will be more watched that either have you followed the rules and regulations from the beginning or not.
Yeah, because any transaction that you do, not by following the right value, your taxability or tax amounts may differ.
Correct.
So the FTA may be worried or interested in looking at, is there any tax or revenue leakage for them?
Exactly.
Right. So people may also wantedly or not knowingly, they may get into these situations where your transactions are not valued or recorded at right value
Yes.
or right amount.
Absolutely.
Right. So with respect to the qualifying free zone persons, What are some of the specific disclosures that you may have in corporate tax returns that you file for qualifying prison persons?
So there are certain points which I want to highlight. One is the domestic foreign PE. That option or opting for that is very important. Then the apportioned revenue has to be explained. Report non-qualifying revenue appropriately. That is revenue from transactions for the non-free zone person. That has to be in relation to the non-qualifying activities. Revenue derived from the excluded activities. So these, as I was explaining earlier, the qualifying revenue, non-qualifying revenue, excluded revenue, and also the de minimis calculations. So those all have to be clearly spelled out. Second thing, we were talking about substance. So when we talk about substance, the average number of full-time employees which are available to the free zone or the qualifying free zone, that has to be also reported very well. So these are important points. Return also asks explicit confirmation for fulfillment of each of the 6 conditions which I mentioned to get the qualification of a qualifying free zone person. Those 6 conditions. So under the corporate tax return, it has to be clearly confirmed. Each and every point has to be confirmed that yes, we adhere to 1, 2, 3, 4, 5, 6. It's that. Another important point, as discussed above, is the bifurcation of the details to be given for qualifying income subject to 0% and taxable income subject to 9%. So that bifurcation also has to be given.
Yeah, I think wonderful. Thank you for the valuable inputs on qualifying prison person and then compliances. Thank you, Naveen.
Thank you.